In today's video, I'm going to take you with me as I open an account at Fidelity and then invest $100 in 5 different stocks. I want to show you how simple the investing process can be. First, we're going to open the account. Second, we're going to transfer money into the account. Third, we're going to do some quick research on which stocks to even buy. And fourth, we're going to buy 5 different stocks using Fidelity's Stock Slices. And if you don't know what stock slices are, take a look at this video because I do walk you through that. All right, let's dive in. All right, let's get started and open an account. So I came to Fidelity. So for this, I'm just going to do a brokerage account. If you need help with figuring out what a brokerage account is, take a look at this video because I help you with that there. So we're going to go with a brokerage account. This basically just means it's not for retirement. I'm just going to do individual just to keep it simple because I'm just doing the $100. My Fidelity customer, no. Okay, so obviously I'm not going to share my social. I just entered a bit more of my information, and now we're at this place where they're asking you which core position. They're just asking you for your like when your cash is in there, which one do you want that to be invested in? Because they're money market funds. They're all pretty much the same thing. They're going to pay like 0.01 or very, very low interest. So I would just go with whichever one is selected for you. And if you really wanted, you can call them and ask them which one's paying the highest interest if you plan on keeping a large amount of cash. If you're only going to have a little bit of cash in there, it doesn't really matter at all. Email preferences, of course, electronic. Okay, got my account open now and I connected my bank account. So what you're going to need is your routing number and your checking account number. So anyway, once you get that information, you just enter it all. I requested to transfer $100. It said it's not going to be available for a couple of business days, but I see it shown here. So I'm not sure if I'm allowed to trade or not, but we're going to try because sometimes they'll let you because the stock takes a few days to settle anyway. So let's try and see. So we're going to go to trade, and I've not worked with this account before or at Fidelity. My accounts are at E-Trade, but I like Fidelity. I just saw download your app and I was like, oh yeah. Okay, well, let me do that. Here's a little advice on picking out stocks before we actually get into that. Don't chase quick returns because you're more likely to have quick losses instead of quick returns. If you're really intrigued by something that you think is going to do really well, get a little bit and think of that as the cherry on top of your sundae. And the sundae is your whole investing portfolio. And that like extra that you think is just going to do so well, have that as the cherry on top. And if it does well, great, but if it doesn't, you haven't destroyed your entire investment portfolio over it. I see a lot of beginners chasing these massive returns. They just think, oh, once I start investing, I'm gonna have these quick returns. And I wanna set you up for long-term success with your investing life because it isn't a race, it's a marathon. It's not a sprint, it's a marathon. Whatever that saying is, that's how your investing life is. You've gotta think of it for the long run, and that's when you're gonna find success in investing. Taking a look around us at what we use every day, to me, is the best way to kind of get started with investing. I'm recording this using my Mac. I've got an Apple Watch, I've got an Apple phone, my husband does, my daughter does, and pretty much all of my friends have Apple products. I use Instagram and Facebook every day. Instagram is owned by Facebook. I'm not a Starbucks everyday type of person, but I have been seeing some really good options at the store lately. They've got iced coffee and delicious creamers. So they're finding ways to market themselves outside of just their physical store location. We watch Netflix, I use Google every day, and obviously YouTube. Google owns YouTube, so let's look at all of these type of stocks because those are the ones that you're already using. You're already putting your money towards those stocks and your time and your energy. Or towards those companies. So those are the ones that it would make sense to invest in or at least consider investing in first. We're gonna do some quick research here. I'm gonna use this site called TipRanks. I really like it for price targets. And we're just gonna enter those common names that I have around my house and we're gonna enter those and make a quick decision because I know this can we can get into paralysis by analysis, but this helps us avoid that. First, and look at Apple. So that is their symbol, AAPL, or you could just enter the word Apple. So what this shows us is the left-hand side of the screen shows the past 12 months of performance, and the right-hand part of the screen shows what analysts expect the stock to do over the next 12 months. So let's get rid of that. So the middle line is the average of what analysts believe the stock's going to do, and it says 32 analysts have reviewed this and offered a 12-month price target. So look at how many analysts have reviewed it, because sometimes it's like 2 or 1 or something, so take that with a grain of salt, obviously. But when it's 32, that's a great number for getting a ballpark figure of what you could expect stocks to do. And they're not always right, so keep that in mind, but just it's when we're comparing like a bunch of different stocks or several different stocks, this at least gives us some sort of frame of reference to go by than just, guessing. So, all right, this is saying per the analyst that the average is actually going to go down a bit from where it's at now. Okay, good to know. And then the low side, that's like, okay, if things go really bad for the company and the economy, that's what they'll expect. On the high side, if things go really well for the company as well as the economy, then we can expect something more towards the high side. I always like to just go with what the average expectation is. And I also like to take note of that cone. If there's a wide range, then it's really could be a wild ride. But if it's a narrow cone, then you might have a better expectation to stay somewhere within that range. All right, so Apple doesn't look great, right? Let's look at Nike. All right, that's expected to have a 13% upside. So this one had 26 analysts review it, and also its expected price target is 111. I mean, is that not like angelic numbers or something? So that's pretty funny, but the low side is $87. That's like over 50%, or that's like a gigantic loss, right? But that upside looks pretty good. Let's move along. Starbucks. Let's see what they're expected to do. 10% upside. Okay. So from where it's at right now, $83, it's expected, or I'm sorry, this is what it's at right now. It's at $75. You can see it up in this area right here. This is the number that they expect it to be. So 10% up from its $75 rate that it's at right now. Okay, we looked at Apple. What about Facebook? We talked about using Instagram and Facebook all the time. That's projected to be a 13.9% upside. 35 people have reviewed it. And that cone of projection isn't too bad because it's at 251 right now, and they're saying the low is 225. It's not the worst. Okay, so Facebook looks good. Nike looked good. What's Amazon doing? I mean, it's already so high. 18% upside from where it's at right now. But you look at the low side, it's very far from the average or the high, but it's got an 18% upside. So if we're keeping things simple and just going with these numbers, Amazon's in. I mean, I still shop on Amazon every day. Not every day, but a lot, right? So think of the things that you're using every day and other people are using. Netflix. What are they doing? Okay, a 4% upside. It's at $4.98 right now. It's expected to get to $5.19. I'd pass. And look at that low side. That's a big down. So let's cross Netflix off the list, and we crossed Apple off the list. What about Google? 16% upside from where it's at right now. Okay. 32 people have reviewed it. Google's in. How about like a healthcare company like Johnson & Johnson? I mean, are they healthcare? I know they're obviously baby soap, but I think they're involved in a lot more. And look at this. I like to see this where all three of the cone of projections are up. Even the low side is higher than where it's at right now. So Johnson & Johnson, sign me up. Warren Buffett bought this like a long time ago. 2% upside, meh, boring. Just kidding. But yeah, so, ooh, 16% downside, no thanks. They could be wrong too, but I'm just saying, like, I like to just kind of go with what these people are saying because they're sitting there overanalyzing all this stuff. So they're doing the work for me basically, right? All right, so I think we've got our 5. We crossed Apple off. Google's in. I'm just gonna review them real quick. So Google, Facebook, right? Facebook owns Instagram. 13% upside, okay. So we've got Google, we've got Facebook, we've got Johnson & Johnson, right? That was a third one. I was just trying to think of like something different so they're not all tech. And see, these are different, right? Like Nike is so different. Okay, so that's our 4th one. I say, I mean, anything over 5% is decent. I like to see stuff that's over 10, 15%, obviously, but also being aware of that cone of projection. So it's at $75 now, and they're saying the low side for this one is going to be 73. So that's not bad. So yeah, we've got our 5 stocks. So let's use those and just buy, okay? That's what I'm saying. It can be just as simple as that. Obviously not with a gigantic sum of money, but with some money to get you started so that you could start learning and gaining confidence and then creating a long-term strategy from there. Logging into the app here, we get our morning update, click trade, and then you're gonna see your cash available, enter the symbol NKE for Nike, click buy, enter the dollars since we're using stock slices, and then we're going to go market order, verify, and confirm. Then we're going to enter the next one, GOOGL, click buy. Same process for all these. It shows you a little summary under there. Click the dollars that you want, market order, check if everything's okay, and go ahead and place the order. On our next one, J&J, Johnson & Johnson, buy. Look at the little summary there. It basically tells you the current price that the stock's going for, and you just confirm it there. And we're on to our next one, Starbucks, SBUX. Same process again. Enter the amount. I like to use market order versus limit order when I'm just buying a very common stock. If I were buying something like a penny stock, then I would want to put a limit on it. So now we're just looking, okay, I've got 4 stocks. We need one more, and that was Amazon, AMZN. Enter the dollars, 20 bucks. We're just buying an even $20 in each of these 5 stocks. Confirm the order, and now we've got our 5 stocks. You can click on the positions, see what you're invested in. If you scroll over, you get some different information as the day goes. You'll see your total loss or gain for the day. Already things are down, but that's okay. That's kind of how it happens. Here we're just looking on the home screen. You can see different news articles if that's something you're interested in. All right, I'm about to give you one last important thing to consider, and if you're finding this video useful, please consider subscribing and give this video a like if you found it useful, because it does really support my channel. One thing to note here is it was easy for me to make these quick assumptions and quick research because we're investing a small amount, right? It's a great amount to just get started with, $100, $500, $1,000, just to get your feet wet and get used to investing. But I would tell you, if I was investing a larger lump sum, I'm not just gonna take 5 or 10 minutes and do quick research and then be done with it, because it is a larger amount, right? So you do have to be more cautious. Also, I might not put it all into 5 stocks. I really think it's important to have an investment strategy that is your core portfolio. So something that's diversified. It still can be aggressive or risky, meaning primarily invested in stocks or index funds that contain stocks. Then after you have that core strategy, you can add some individual stocks on top because those might give you some additional returns. But if they have losses, then you're not just destroying your whole investment strategy like we talked about in the beginning. So keep that in mind. I'm just showing you how easy it can be to just get started, because sometimes we hold ourselves back and we get so scared and afraid to invest that we do nothing, or we get trapped in paralysis by analysis. And I don't want that to happen to you, because when I worked with wealthy clients, the majority of, actually anybody says this, everyone says, if I could do one thing, it would be start sooner. If I could do one thing over again, it would be to start sooner. So if you're watching this right now and you're wanting to invest, get started, because your future self will thank you. Otherwise, a year can go by, 5 years can go by, and you'll look back and say, dang it, I wish I would have gotten started already. But even if you're already in that position, if you're looking back at yourself like, why didn't I do this before? Just be gentle on yourself, because I know it is difficult, and I'm not trying to like make light of it, because it is your money and you work really hard for that. So you don't want it to just get lost. But we also want our money to work for us for the long run. So that's why I really do believe in investing and putting your money to work for you, because it is a beautiful thing when you just start to see your account grow and yeah, you're just making money in your sleep, sort of, right? I mean, the stock market's open during the day, but you get the point. Using stock slices or just investing a small amount is a great way to get started with your investing journey, because you can see what it feels like to be invested, to go through those losses, to go through those gains, and it'll just give you some confidence as you continue to have more money available to invest. You're just gonna feel better and better about the decisions that you're making because of this time you took to get started. If you have any questions, let me know in the comments below, or you can shoot me a message on Instagram, and I will see you on the next one. Bye.